Good afternoon, everyone. It's Dave P with the Cream. Today is September 10th, 2021. Got a lot of cool stuff to share. Been chit-chatting with Jake here a little bit. He knows what's going on with us behind the scenes. We just closed the biggest deal of our careers. Probably touch on that just a little bit, but it's not really, it just closed yesterday at 4 p.m. So we're not really getting into the nitty-gritty, getting granular on that particular deal. We certainly will be in the future. Still kind of digging through the weeds on it. But today, we're going to be getting into a lot of private money stuff and how we structure our private money deals when you're raising money. And it makes sense to raise private money on stuff. So when we're out there, finding off-market motivated sellers, this is where it all starts. I don't care if you're wholesaling or if you're looking to build a portfolio or if you're looking to do fix and flip or wholesale. Really, those are the main exit strategies. It starts with finding an off-market motivated seller. If you don't have a good deal, there's really nothing you can do with it. So a lot of times when you find a good deal, if you don't have the private money raised or you don't have really a lot of experience with the construction stuff, you're going to want to just wholesale it. And I think that's what Jake is focused on. And we were chit-chatting about that. Wherever you're at in your business, that's a great place to start, is the wholesaling, because there's very little risk involved. Um, and it doesn't take any capital to really do this and buy these properties. But what you're going to find is after you're out there consistently finding motivated seller leads, some deals make more sense to not wholesale, but to actually buy these properties, take title, and then resell, especially in a hot market like we're in now, either on the MLS to more like retail type buyers, or like what they call a wholesale, where you'll buy it, maybe splash it up, put a little work into it, and then find kind of a do-it-yourselfer type of buyer. And if you can make, over twice amount of money or three times amount of money and not have to do a lot of construction type of work, it makes a lot of sense to buy this property, take title, and then turn around and sell it to more of a retail-minded type of buyer. If it needs too much work, and you don't have the private money, you're not going to want to take title on this thing unless there's a giant wholesale spread where in that instance, you would just buy the property and do like a double closing, kind of get the transactional funding. We're going to be talking about how we structure our private money deals. And this is every deal that we buy, whether we're fixing and flipping it, or we're going to fix it and then turn around and refinance it with a bank. We use the same type of private money structure, and that's what we're going to be getting into on today's call. Mr. Jake, I know he's feeling a little bit groggy today, but we're going to get that. We're going to get the energy up. Jake was the best man in a wedding, and he's just coming back into town, but the man is here, and he is. We are getting into real estate. So, Jake, fill me in a little bit on what has happened since last week. I wasn't on the call last week. RJ and I, if you notice, we've been dividing and conquering because we're running a full-time real estate business as well. He's right in the other room. I can see him through the glass here. He's working real estate stuff right now. But what is going on in your business, especially with marketing, and are you attracting leads? Do you have any pending negotiations we can chit chat about or anything like that?
All right. So I think you're on the first one. My whole focus is just wholesale, just trying to get in touch with those motivated sellers. And really the only way I'm doing it right now is just driving for dollars or pulling lists from team and going through the good old cold call, sitting here for 5 to 8 hours a day, just going through number after number. I've got some motivated sellers, but nobody that's really hot. I had one guy, I was on the, we were on the call with RJ last week. I had a guy call me on Thursday, really motivated, but had a problem with, it was his daughter who lived in the property, 6 kids, no rent contract, the whole 9 yards. The place is going to shit. Wanted to get her out of there, but he didn't want to be the bad guy. He didn't want to, come in and kick her out with the 6 kids. So I told him I'd give him a call back Tuesday with some strategies on how to help him out. Maybe some, find her a property, rental property, a moving company, yada yada. Gave him a call Tuesday. Haven't heard back, but I've bugged him every day. Left him a voicemail. So that's where I'm at with him. Besides that, just plugging away at my list, just trying to get that person.
Let's stop there for a second. So we have found in our careers, and even to this day, because we're actively marketing for motivated sellers, cold call is our biggest approach. Um, whenever you find a motivated seller who's got a family member, like a daughter or a granddaughter, grandson, whatever, ex, especially ex, spouse or ex girlfriend, boyfriend, um, and they're living in the property, and the person who's the actual owner of the property is contacting you because they don't want to do the dirty work. Those are
Mhm.
phenomenal deals. The emotional connection to real estate is always going to produce the biggest deals. And whenever there's like somebody that this person is a family member living in the property, there's that emotional connection to this deal, and they don't want to be the bad guy or gal. Those produce great real estate deals. So stay with that one. I wish there was a way to like identify just people who rent to their family members. I don't think there is. I don't think it's possible. Maybe there's something with like the utility bills. When the utility bill, this would be an interesting thought. And then I'm pulling this out of the stratosphere right now. So this is just the first time thinking about this. What if there was a list where we can identify who the utility bills our name is in, and if it's the same as the last name of the actual owner, but the actual owner's tax mailing address is a different address than the property, that would probably identify that it was a family member living there. That's a hot idea. I don't know if anyone in the country thought of that. Probably it's not original, but it's original to me. It's original probably to Jake as well. But we're just thinking outside the box, and that's what we need to do as real estate investors. Is constantly, yes, we go after the prop stream stuff in the Cream community. We have an affiliate link. I can post it in the comments below after eventually when this goes on YouTube. Obviously, anyone in the Cream community gets first access to all of our stuff. And you can find that at risewiththecream.com. But thinking outside the box is essential when we are real estate investors and trying to target motivated sellers. I like what you said, Jake, as far as targeting motivated seller or driving for dollars. That's how I got my start. That's a way to get the deals that nobody else is going to. And what I was getting ready to say is, yes, we can pick up lists from PropStream. We do it too. Why not? You have to get data. You have to always be acquiring data and buying. But if you could start to develop your own hot list by driving for dollars or coming up with creative ideas to get, maybe like we were talking about, find a family member list or create your own little niche, and try to think outside the box and find deals that nobody else is going after. It's really the best way to be successful in anything. Because come on, if something was just easy as buying a list and, working that list and getting deals, everybody would be doing it. But I will share this, just buying the list, Jake, and buying a data list and actually working it, you will get deals because a lot of people buy the list, but they never work it. So what I would suggest as well is when it comes to the cold calling, commit to a number every single day. Do you have, I'm just curious, and if not, it's totally fine, but do you have a set number? It's like, look, today's the day I have to make X amount of calls every single day. Do you have that?
Yeah, it started. I was a little zealous at first. I was shooting for like 50, but I think you were there. I wasn't using a dialer, and so it was just like trying to target fit. Like prop stream, you'll get like 7 numbers for one person. So I toned it down to like 35. If I hit 35 or 40, I'm a happy guy.
That's good. And if you're having quality conversations with sellers, this is what we tell our guys and gals working the phones as well. If you're having quality conversations, you shouldn't be targeting 100 conversations a day. Quality is better than quantity. And the average talk time, when I get a motivated seller on the phone, when I get a motivated seller on the phone, I'm spending at least 20 or 30 minutes with them, especially if I know there's a potential deal there. Yeah, spend the time, but put the focus and energy on the ones that make sense to do that. So quality is definitely over quantity when it comes to this stuff. Um, and right now, Jake, you're working the prop stream list. Any other data sources that you're finding data from?
That's really it. So I started out with prop stream, like absentee owner and stuff like that. And I noticed that I got about like 150 people through, contacts through, and almost everybody I physically, came in contact with was like, hey, you've called me 5 times today. Can you stop? Can you stop? So it seemed like that was the road that was traveled the most, right? It was easy, click a few buttons, you filter some people out and you go through that data. But I like what you said was I started driving for dollars, and literally physically going down, noting properties and, skip tracing those. And I started getting way more quality conversations, as you said. Yeah, I don't talk, you don't get in touch with some people as well, but that's just the nature of the beast. But when I do, I was having longer quality conversations with people. So I'm really liking that, like you said, like a niche right now. It's seems to be working.
And the only way you're going to fail, Jake, and the only way anyone watching this video, if you're just getting started and kind of plug it away, the only way you will fail is by quitting. And that's just not even in the vocabulary. You cannot quit. This is what we've set out to do. So what is our alternative whenever we're embarking on this business, in which this is the best business, right, to be in? Real estate is the best business, and I'll share with you why. We are dealing with intrinsic value. We're dealing with an essential thing. So what is essential to be? So let's strip it all the way back to the bare essentials. What do you need to survive? Obviously oxygen. The planet wouldn't be alive with oxygen, so that's off the radar. I mean, come on, that's a given, right? Well, we need food. If you're not eating, you're going to starve to death. You need water. If you're not drinking, you're going to die of thirst and dehydration. And what's the next one? Well, you need clothing. You need to protect your skin, and clothing is essential. Stay warm and protect yourself from the elements. But you need shelter. If you're just out in the elements getting pounded by the weather constantly, you're going to eventually probably die, right? I mean, shelter is essential, and then we're in the shelter business. And when you strip it all the way down like that, and you look at it, it's like, what other business would I be in? What do I want to do? Go around and sell energy drinks? What do I want to do? It's like, maybe create NFTs and see if I can try to market it. All this digital art, it's just not sustainable. It's not an essential thing. So we need to learn real estate. We need to learn how to find great deals, because there's always going to be a demand for the business that we're in. All business and economics is stripped down to what? Supply and demand, right? Well, we have a supply of real estate. It's right out your door. Walk outside, you're looking at, there is a supply there, right? It's up to you to find the people willing to sell, and willing to sell at a discount, right? And then there's always a demand. There's always a demand. I don't care what is going on with the interest rates, with the political climate, with the whatever economic climate, there's always a demand for housing. And that's why we're in this business. And that's why I love this business so much. So what I would like to get into here with you, Jake, is how we structure our private money lending deals. Now, as I mentioned in the very beginning, we use private money quite a bit. And a big question that we get is, where do I find private money lenders? Well, I want you to know the majority of the people that we lend money to or that lend money to us, and RJ is entering the party here. The majority of the people that lend us money are regular people. These are not savvy financial people. Welcome to the call, RJ. I'm just getting into some private money stuff, but we get the question all the time, where do we find our private money lenders? And I was explaining, well, a private money lender is anybody. It's your neighbor, it's your family member, it's your friend of a family. It's anyone who has money sitting in a bank account and just rotting away, not earning a positive return on investment. And you don't need to be a financial genius, right, to understand that if your money is not working for you, it's losing value, it's losing purchasing power. And at some point in this call, I want to read a quote. It's by one of my famous favorite economists of all time, Thomas Sowell. I really encourage you to check him out. But a private money lender is anyone who's sitting on money, and that guy's name is Thomas, and then Sowell. Anyone who's sitting on money and maybe they don't want to put their money in the stock market, well, that's an easy sell. It's an easy sell for you because stocks are at an all-time high. I think we hit 4 days in a row now where it's in the red, it's low. I don't know. There's a lot of turbulent times. There's a lot of uncertainty with the stock market right now. So it's very easy for you, Jake, to say, look, I'm an expert at finding off-market undervalued properties. I work with private money people. I work with people just like you. They put up the money and they earn double-digit returns because I use that money to buy the house, and then I flip it and make a profit, and I share those profits with my private money lender. How's the market treating you? I mean, how much are you earning on the money that's sitting in your bank account? Zero, right? You don't want to trust the stock market. What alternatives do you have? The bond market, do you realize, a lot of people don't understand what bonds are. It's basically a loan to the government. So you loan your money to the indebted up to their eyeballs, beyond their eyeballs government, and the government's willing to pay you a whopping 1.3% return on investment. Like, what a joke that is, right? And when you compare that to inflation, and inflation is just basically the amount that your money is going down in value. Inflation right now is at like 5%. So all the money that we is sitting in our bank accounts is losing 5% a year. So it's just crazy. You got a $100 bill sitting in the bank. Well, next year, that's only going to buy $95 worth of stuff, right? And it keeps going like that. So we need to help our friends, family, fellow investors earn a return on investment, which is greater than the level of inflation. People understand that you got to get your money working higher than the amount of money, the amount that your money is going down in value in order to stay afloat, right? And there's no better way to do it than by lending that money and having that money collateralized or secured by a piece of real estate that has a big equity spread in it. It's not like the house is worth 100,000 and the person lending you the money, Jake, is loaning you 100,000. No, you're finding these things off market. So the house is worth 100. You're only looking for a loan for 60,000. So if this, the market falls out, which I don't see it happening anytime soon. Why? Because housing is in very much demand, especially in your market, in the Ohio markets. We're in the affordable housing. There's no better place to park money than the affordable housing, because if things get rocky, and people want to downsize and they're in high-end homes, where do they go? Affordable housing. If things are going good and somebody's in a rougher part of town or a lower income area and they want to move on up, they go to the affordable housing sector. It's the highest demand real estate. So when you're talking to a private money lender, Jake, you can be extremely confident that you are doing this person a favor. And when they give you money for your real estate investments, not only are you sharing profits with them, which is going to earn them a much higher return on their investment than any other alternative in a much safer environment, right? But it's the fuel for your business as well. It's a total win-win, is the ultimate win-win. And this could be anyone, your friend, your girlfriend's family, anyone. Start making it known to your circle that you are an expert at finding off-market deals. Be confident. Not a lot of people are even going after these off-market discounted properties. You are. You're going after them every single day. Get excited about that, right? You are providing an investment opportunity to people that they do not have this investment opportunity. They don't. What are their investment opportunities? Stock market, bonds, financial planner, whole life insurance policy. It's a low income, whole life insurance policies are great, where you can borrow against it. But if you don't have investments to borrow against and do it, like, it's a whole financial thing. Now, RJ and I do this stuff, but the average person is not doing this stuff, right? So I want to have you enter every single private money conversation knowing and with the confidence to know that you are providing them an opportunity which is truly helping them survive inflationary times and make a lot of money and come out of this thing thriving, and you're going to come out of this thing thriving as well. So what I pulled up here is a sample private money note that I'm going to go through, but I want to throw the ball over to RJ here because he was working on the big deal that we just closed and tying up some loose ends. We're going to be doing a lot of dividing and conquering these days, but wanted to throw it to RJ and see what he has to share, if anything, and then maybe his thoughts on the private money conversation we're entering here today.
Hey, Jake. How's it going?
What's up? Good, man. How are you?
Good. Did you have a good week?
Yeah, it was a good one. Congrats on that big deal.
Thank you, man. It's been a long road to get it to closing. So now we have the next leg of the race. So thank you, appreciate it. So last week we had, your homework was to contact, right? You had to make contact with that seller and let them know and give them some guidance about how to handle a tough family member. How did that go?
Like I was telling Dave, kind of a bummer. I told him I'd call him back on Tuesday, and he was real excited, and, yada yada. And I gave him a ring on Tuesday, and the guy's voicemail, left him a voicemail. Called him yesterday, or I called him Wednesday, Thursday, left a voicemail each time.
Okay.
Gonna call him. Gonna keep bugging him.
Keep bugging him. Send him a text. Is he a texter or is he a phone call?
That's a good question. He's sounds like an older gentleman, but I'll shoot him a text, see what happens.
Try the I don't know if you've tried this yet, but maybe a handwritten note.
Mm-hmm.
Sometimes older, the senior community like the old-fashioned way of communicating, a handwritten note. So try that. So I know Dave's going to go into explaining a private money note. Is that what are you guys conversating about structuring private money deals and stuff like that?
Pretty much.
An overview. Yeah, if you need support with that, we have a in-depth course, private money course, where you can get the paperwork, you can get structuring the deals, you can get how, specific examples of how we found the lender, how we've structured this. And that training is actually in the community. I believe it's in the courses section. So definitely check that out. My only input in private money is right now, since you're looking, right? Sounds like you're looking for private money. You got to get out there and network and hang out where money's hanging out. Where are they hanging out? Real estate investor meetups, charity events, country clubs, the golf course. Just get out there and be curious and talk and have conversations with people, and conversations, just like how Dave said, like you can start talking about when they ask you, what do you do, Jake? It's a very powerful question, and how you answer that question can lead to conversation of, I've got 30, 40, 50K. I've been wanting to invest in something. Why not invest it in you? So that example that he gave is, and you'll see this in the recording, it's like, it's key to use. Not just saying, well, I kind of dabble in real estate.
Yeah.
The way you answer that question, what is it you do? If you answer it, well, I help people get into real estate investing by introducing them to really good off-market deals. And then they're like, what the heck are you talking about? That opens the conversation instead of just saying, wow, I just do some real estate,
Yeah.
You'll know too, who when you're talking to somebody, that you probably have a sense that, okay, this is probably going to be a good conversation. If you're talking to like a 13-year-old, 14-year-old, whatever. But if you're talking to somebody who could be somebody that might have money, answering that question in a different way could lead to some different results.
And think about it, man. I mean, so many people, like RJ is saying, like so many people are infatuated with real estate. It's all over the TVs, what is all the I haven't turned on a real estate TV show in a long time, but I promise you there's real estate TV. Why? Because everybody loves a before and after. I don't care if it's like a health before and after where somebody lost a lot of weight and it's like, oh my gosh, it's like, look what's possible, look at the discipline, look at the willpower, whatever it is. And everybody loves a positive transformation. And then the TV shows utilize that as well. They talk about, oh, I bought this house, fixed it up, and look at the beautiful house that we created, and look at all the profits that I made. Everybody loves a rags to riches, from poor to rich. Everybody loves a fat to skinny. Everybody loves an ugly to pretty. Everybody loves a makeover. Everybody loves, right? I mean, do you agree, Jake? It's just like in society, we're built into like that, right? So with that being said, you're in that business. And when you talk to people and let them know, man, I find cheap houses, fix them up and sell them. And the real estate market's incredible right now. Do you do anything with real estate? And a lot of the people that you meet, they don't have the wherewithal or like the, quite honestly, for lack of a better term, I'll just say keep it, PC for today's call, because this will eventually hit YouTube in a couple of weeks, but they don't have the courage to do what you do. They don't have the courage to get out there and talk to the motivated sellers and actually get deals. But guess what they do have? The money, right? So you're going to always be keeping the lion's share of these deals. I mean, obviously, you're the operator. You're taking all the risk, right? And but it's when you start looking at this and you project that confidence, because you're having these conversations weekly, Jake, you're on the phone with us. And I mean, nobody else is having these conversations. And the people that you meet, they don't have the courage to do what you do, but they still want to be involved in real estate because everybody loves it. So these people want to be passive investors. They want to get their money working for them. We've already kind of overcome any mental obstacles that potentially you may have. Number one is, well, why would they invest in me and not invest elsewhere? Well, you actually bring the best thing to the market of anyone. You're not as risky as the stock market, and you're going to pay a hell of a lot more than bonds. And then what else are people investing in? New startup venture businesses and stuff like that. That's extremely risky, right? Angel investor, come on. I mean, what do you invest in some startup business? That's extremely risky. When these people invest in you, they are securing their money with a livable house. This is the best collateral on the street because it's essential. We need homes to live in. It is what it is. It's like, so with that being said, before we kind of get into the way we structure the private money stuff. And by the way, like RJ mentioned, we have a whole private money course, which is way more detailed than we're going to get in. We're scratching the surface, man, but we totally teach you how to structure these things and have these scripted conversations with these lenders and whatnot. But what questions come to mind for you right now of just like, what things are you just uncertain about, or what is like always been a thing in the back of your mind about this private money stuff that you just didn't get, or like, what can we answer today for you right now?
I haven't dug too deep on the private money, but I always kind of knew that was where it would go if I start consistently finding off market properties, because I'd like to take down burrs or even something bigger. It's always been like, I guess it's deal to deal, but like how what's the detail on paying them back exactly? And I know you guys had talked about it maybe a few weeks ago, maybe a month ago or something. How to, what their return is and when, and, yada, yada. But that, if anything's fuzzy, it's that, especially with like a cash out refi, something in that area.
Okay. So let's talk about just an analysis of where we raise private money. And basically, there's two situations. You're either going to raise private money for something that you're going to flip, or you're going to raise private money for something you're going to burr. And the concept is basically the same, regardless of what you do. There's a few tweaks that we get into, and obviously the details are in the private money course, but the reality is it's kind of the same thing. So first off, how is it structured? There's really two main documents involved with this private money scenario. So you find a motivated seller, great. Well, you got a purchase and sale agreement with them. That's a document, but that doesn't have to do with your private money loan. So you get the purchase and sale agreement with the seller. It goes over to the title company. They're going to run a title search. They're going to make sure there's no liens. They're going to find out the exact payoff, meaning if the motivated seller has a mortgage, let's pretend that the house is worth 150. You're getting a great deal on it. You're getting it for 100. But let's pretend the seller has a mortgage for 40. Well, that's all going to get paid off and everything with the title company, right? So you're buying this property for 100 and it's worth 150. And let's just pretend it only needs, $15,000 in work, right? So you need $115,000 to do this deal because you're buying it for 100 and you need 15K in rehab. And the seller, they're counting on basically getting $60,000 because they're selling their property for 100. The title company is going to pay off their underlying mortgage. This way it's free of all the liens and stuff like that for 40K. And they're going to be left with whatever's left over. That's 60K, right? You kind of understand the way high overview of a real estate deal, right?
Yeah.
Okay, so let's pretend, and what you're shooting for as a real estate investor is you always want 100% financing. And what that means is you want 100% of the acquisition money plus 100% of the rehab money. And that's the beauty about working with a private money lender, like friends, family, people that you meet, people who want to kind of JV with you and do this thing, put up the money, you found the deal, you're going to be the operator. A private person will give you that $100,000 if that's how you structure the deal. If you're working with a, institutional lender where, they're more of a national outfit, they want to see you have a little skin in the game. And if that's what you got to do, because that's the only money you have access to, it is what it is. Just know if you're constantly putting skin in the game on every deal you do, eventually you will run out of money. And that can make the operations get a little bit tight. So when you're raising the private money for our example deal, you need 115K. You want to go for 100% financing. So you want to get a loan for 100,000 or 115,000, right? So let's pretend your private money lender, you found them, they're going to give you 100% financing. They're going to wire that money right to the title company. The title company is then going to facilitate this purchase for 100K. The $15,000 is sitting in escrow. The $100,000 goes to pay back all the liens, which is their underlying mortgages and any back taxes, anything that they owe on the property, and anything left over is going to the seller at the closing table. The closing table is basically, the seller signing their house over to you or your buying entity. You're signing, what you're signing is basically the HUD settlement statement, all the title docs that say, title insurance and stuff like that. It's just, they prepare it for you. It's nothing to worry about. The two main things that you're signing when you're buying the property is number one, the promissory note. And that's an agreement to pay this $115,000 back. And the agreement is between you and your private money lender. All right. And that is the promissory note. And then there is a security instrument signed as well. And this is the lien that you are signing, putting on this property. You are using this property as collateral for the lender. And basically the lien just says, hey, if the terms are not fulfilled with the promissory note that you are signing, then there's going to be repercussions in that the lender is now going to basically be able to foreclose and take this property. So there's the two main documents are the promissory note, which outlines the terms of your private money lending deal, and then the security instrument, which is a mortgage if you're in Ohio, a deed of trust if you're somewhere like Arizona or California. It's one or the other. It's the same concept. It's just a big lien against the property that the seller now has your property as collateral. And that'll get paid off when you resell or refinance the property. So let's go back to our deal. And we want to talk about, how we're going to pay this lender back. So we're borrowing $115,000. And every single time, I'm just going to put it out there. RJ and I have done some kind of notes and private money deals back in the day where we were amortizing the money. Amortizing just means paying back, and a portion of the monthly payment is going towards the balance of the note. But we're not talking about that today. We're keeping it simple. It's simple interest, and it is interest only. So I'm going to show you right now, Jake, and everybody watching, how to calculate your monthly payment on your private money note when it comes to an interest only note. So Jake, we typically pay our lenders anywhere between 9 and 12% on a private money loan, right? So give me an interest rate for your loan here. Give between 9 and 12%. What's the first number that comes to your head? 10%. That's easy. So what I want you to do is pull out your calculator real quick.
I'm on my calculator. Hold on. Okay.
And how much are we borrowing? So we're going for 100. We're going through 100% financing here, Jake. And how much are we borrowing on your sample deal?
We're doing 115, right? All in.
That's right, buddy. We need the purchase money and the rehab money. So we're getting a loan and signing a promissory note for 115,000 at 10% interest only. It's interest only because that is not amortizing. It is just interest. So what are our payments on $115,000 at 10% interest? Go ahead and plug in your calculator. 115,000 times 10%, what does that give you?
So maybe I did wrong. I'm at 11,500.
That's correct. That's 10% of 115,000, right?
Yeah. Okay, that makes
So
sense.
does that, right. So does that mean that, hey, we borrowed this 115 and let's pretend it took us only 90 days or 3 months to sell this property. When we sell the property, are we going to pay back the lender 115,000 plus that 11.5?
No, just the 11.5 because it's interest only.
Well, listen, we're not giving them the whole 11.5. That would be if we borrowed the whole money for the year. So the 10% would be for the entire year, but you only had the money out there for 3 months. So what we're doing here, we got 11.5, and that's the amount of interest that would be paid if we borrow the money for the whole year. But no, we need to figure out what the monthly payment is. So you got 11.5, and how many months are there in a year, Jake?
Well, we got 12 months.
So go ahead and take 11.5 divided by the number of months in a year, and that gives you how much?
I think I was at like 900 something, and then I times that by 3 because we're doing a 3. We're moving the deal in 3 months.
There you go. If you're a quick study, it's 958.33, and if you take 958.33 times 3, that's going to give you only $2,874.99 is what you owe your lender back. Because remember, you're not borrowing the whole money for the year, you're only borrowing the money for the amount of time it took you to resell the property. And when your buyer comes in with their new money, that's when, let's pretend you sold it for the 150 that it's worth. That is when you're going to pay back your private money lender the 115 plus the 2874.99. So the private lender is getting paid back 115 plus the 2874. So they get paid back 117,874.99, and you sold it for 150. So you're actually in this deal, you're coming out, you made a $32,000 profit, and your lender, they got paid, they lent 115, they collected the 958 every single month. And then when you sold it, you paid them back all of their 115. That's how you calculate what the monthly payment is on these simple interest private money notes. Does that make sense?
Yeah, pretty straightforward.
So a lot of newbies, they think like, okay, I'm going to borrow this money. I've only had the money for 3 months. And they think, well, and even a lot of new lenders, sometimes we have to train the lender, Jake. We have to train the lender to basically be like, they think, oh, I'm going to lend you 115 at 10%, so I'm going to get back 11.5. Well, you got to train them. You got to teach them that no, we got to break that down into monthly. You're only going to get paid back, when the money is out on the street working for you. When we pay you back, that's when the interest stops running. The interest is working when the money is working. When we pay you back, it's sitting back in your bank account. Well, now it's time to like re-lend that money. So they're only earning while the money is out there working.
Yeah.
Does that make sense?
That makes sense to me.
What questions do you have?
So I know so when it goes to like who pays title, right? Like we do like I get we're doing like rounded numbers for ease and all that. There's cost of title in there and everything like that,
Yeah.
correct?
Well, the title, who pays for title, that's going to be outlined in your purchase and sale agreement between you and the seller, right? Because that's the transaction that's going on. The lender doesn't care about title costs because, that's not their expense. They don't have any expenses here. So in your purchase and sale agreement, and the purchase and sale agreement that obviously we provide in the Cream community, risewiththecream.com, if you're watching this on YouTube, that outlines that you, the buyer, are paying the closing costs. Why do you, the buyer, want to pay the closing costs? Well, so you can control the whole thing. You want to be using your title company, your title representative. So the closing costs are typically going to be, a couple $100. But that will be something you pay, unless you negotiate it with the seller. We've done that. Me and RJ have done all sorts of funny stuff. We like split it with them, like trying to save money. And it's whatever you negotiate, but typically you're going to be you're the buyer of this thing. And that's good. It is going to come out of your loan. So you got to factor that in. Maybe you got to borrow 116,000 to kind of cover any unexpected expenses. And you do want to borrow, especially when it comes to these rehabs, you want to borrow a little more, a little fudge factor. In that right, RJ?
Sorry, we use 10% when we're doing rehabs. Always at 10%. So
yeah,
so
right. There you go. I mean, if it's 15,000, you would add another 1,500, so you'd actually borrow 17,000.
Mm-hmm.
Does that make sense, Jake?
That makes sense to me. Yeah.
What other questions do you have? That was a really good question.
No, that was always like the biggest, because you watch like Instagram and everything, and or YouTube even, and people just, it's always generalized numbers, but it's always those little nitty gritty details that I think stump people and even could cause people to question whether like they could do something, right? Because it sounds good, rounded numbers, but when you jump into, there's little costs to build up for sure. And I've been through rehabs. I get the fudge factor, man. It goes from 115 to all of a sudden, oh my gosh, we're at 120. Where'd that come from? So yeah, 10% fudge factor. I like it. Yeah, put money in there for closing. That makes sense.
You don't need a ton, and basically, our advice is always the same. It always has been. If you're just getting started in this and raising private money, you want to avoid doing a $15,000 rehab. Sounds like a good starter rehab. You don't want to take on major construction, major rehabs. It's the quickest way to just get fried in this business, suck up all your capital, suck up all your time. So definitely, if and when you are evolving out of the wholesaling stuff, and you're starting to raise private money, stick to the light rehabs, Jake. It's going to serve you well. And then anything that has a bigger rehab, wholesale those. Let somebody else take those things on. Mark them up a little bit. Sure, maybe there's more profit potential if you were to buy it yourself and fix it yourself. There's also more risk. So if you could get a quick fee and then put that money right into your pocket, use that money for other investments, and use that money for more marketing, I think that's the best play when it comes to the big rehab stuff. You know what I mean?
Yeah, I like that.
So I know we're kind of winding down, and I did want to say, like, keep the homework alive. And the number one thing is going to be finding these off-market motivated sellers, and then reach out to us within the cream community as well with any questions or leads especially, like get more leads, talk to more people. Remember quality over quantity when it comes to these conversations. RJ, any final thoughts here for Mr. Jake leading into next week?
No, Jake, I mean, sounds like your wholesaling is your focus. And, if you have any questions about that, you got about 5 minutes left on this call. Is there anything you need help with that, or is it, what you need to do? And it's just executing at this point.
It's just staying the course and executing, man. It's just that weird spot where, it's just not proven. Concept hasn't been proven quite yet for me. So it's just keep hammering, keeping faith pretty much.
One advice is that continue to talk to all your leads and then prioritize them based on where they are from a motivation standpoint. So this one lead, they haven't been able to get back to you, right? So don't lose sight on the ones that are coming in new. And then the ones you also have to follow up on from a couple weeks ago or whatever, based on their motivation scale. Yeah, you gotta keep sowing. Eventually you'll get to harvest what you been sowing and reap what you sow. Just continue doing that.
I'm looking
being
for
consistent, man. Being consistent, and then also being a little bit creative with the current leads that you have, especially the ones that are like, oh, I'm not motivated. I'm not wanting to sell right now. Do you know anybody that wants to sell? It's a great follow-up question.
Yeah.
So.
Yeah. Yep. I'm definitely in that weird spot. So we're just keep plugging away, man.
Yeah, be consistent, just pound it, be confident, and just know you're in the right business. I think, even if you're showing up to these calls just to get that extra hit of confidence, but just know you're doing the right thing. Get out there, talk to as many people as you possibly can. Keep it playful. Don't put too much pressure on yourself. At the end of the day, you're adding value. You're in the best business. I mean, if we're out there selling energy drinks and doing some garbage business, it certainly would leave room to maybe be a little shaky out there. Be confident, be strong. You're a strong cash buyer. The right deal comes along, you can even hit us up in the cream community. It's like we've done transactional deals and stuff like that. It's like, come on, let's just get out there and shake that money tree and get out there and do it, right? And pound it.
Yeah.
So go ahead, Jake. Did you have something else?
That's it, man. I appreciate it. Congrats again on that large deal you guys landed. That's pretty cool. It's inspiring. That's where we're all, anybody who's serious, that's where we're looking to go. So that's cool.
We haven't even put it out there yet. You're one of the first to kind of know like the details of how it's all shaken out. You're good. But we're going to be probably coming out with that today. RJ and I are going to talk about kind of how we want to do that. But Jake, I will see you next week. So will RJ. This has been a presentation of the cream, and we will see you on the next video.